Sometimes there's a really fine line between a landlord and an investor, and you don't want to go down the landlord route. In this video, I'm going to cover the 5 top common mistakes that I see that property investors make, and the 5 things really you should avoid if you're looking to get into property or you're looking to scale your property portfolio. Hello everybody, Jason Davies here at Lighthouse Investments Group, and I want today to cover top 5 mistakes that I see from investors. And you know, we speak to a lot of investors, and sometimes people have seen this. You know, they have, even investors that have hundreds and hundreds of properties actually end up with hundreds and hundreds of headaches. And they're trying to operate it as if it's a job rather than a business. So I really hope this video will be useful if you are going into that property journey to avoid these 5 typical things that I see. Do us a favour, if you find this video useful and any other of our videos, smash the like button and the subscribe button, notification bell so you don't miss out on any future videos. So enough of me rambling, let's get to the first one. The first issue I ever see with an investor is the fact that they buy their property investments with their emotions or their feelings, as opposed to actually buying with logic, buying with the formula. And we spoke about the track model, which is in one of our videos. If you haven't seen that, check that video out. It's great in terms of what we determine at Lighthouse Investments Group to help our investors choose the best properties. And that is so important. Buying as if you were going to live in it. You know, it's a property investment. It's a buy to let. It's not, you're not buying to live. So it's not about your thoughts and feelings, you know, talking to the neighbours, understand the area. It's actually about, does it have demand? Is it going to work for that tenant type? So you've got to have a strategy involved in this, and you've got to do your due diligence and your market research and everything and all of the above. But it's really important to use the formula, understand, is it going to get returns, take the emotion out of it. And that's going to be key if you're trying to build a property portfolio business. So mistake number 2, and this is a really common one, is that people think when they start their investment journey they need to invest close to their home, right on their doorstep in fact. And the problem with that is that where you live may not be, it may be, but where you live may not be a very good investment area. And it really got to get your mindset away from this idea that you need to be really close to where you're investing in. Because the problem with that is that it creates a mentality, the fact that any single issue that happens, and this is the difference between a landlord and investor, any single issue that you see, you're going to actually go out and try and fix that issue. So you're constantly being reactive, you're constantly firefighting. And that is not a business, that's a job. And as I said, it's financial burden. And you're not going to be wanting to go down that route, especially if you keep getting properties. It's not sustainable. So try to think, actually, where's the best area to invest, regardless of where you live, and invest remotely with the right formulas so you don't have to necessarily be at the doorstep of where you live. Now, number 3 is actually the opposite of that, and it can work. We've seen investors in this case where they actually do buy remotely, they invest in areas remotely, but they invest in areas in which they've not done their due diligence, they've not done their market research. They don't understand whether or not there's a demand for houses in that area. They don't understand whether or not there's going to be regeneration in that area. Have they looked at the capital appreciation from at the point in which they're buying to the next 5 and 10 years? They don't know the types of tenants in that area. So that you need to do the market research before you go out to buy something in a remote area, especially when it's remote, because you don't know the area. You may not know whether or what type of tenants that they go to. So you can solve that by speaking to estate agents, joining Facebook groups in that area, really trying to work out and do your market research. That is absolutely critical if you are going to invest remotely. Number 4, and this is perhaps the biggest issue I see with investors, or so-called investors, is the fact that they actually are landlords, they're not investors. And they have loads of properties, but they will go straight and deal with any issue on a daily basis, on upset tenants, dealing with void issues, and they get far, far too involved. What you actually want to do is build a system a property management company that can support you on all those day-to-day issues so that you can concentrate on your next investments. Remember, a smart investment that's bringing in the cash flows, bringing in the capital appreciation, you're not worried about the specifics, and you can outsource that and build up a really good company business that manages all of that for you. And you've calculated the costs involved, and it doesn't have really a massive impact overall, because ultimately it's going to help you to drive the business forward and pick the next best investments. So don't go down that route, because ultimately it's going to make you just absolutely sick of all the properties that you have, because you're trying to deal with every single issue constantly, and you're creating no time for yourself. Remember, the whole reason I got into property, and I want to help other people get into property, is the time. Yes, there's the money, but even more important than money is time, because time is constantly depreciating. You're never going to get that time back. After watching this video, you're never going to get the time back. Hopefully, this is useful time because you're investing in yourself and you're investing in your knowledge, but time is always depreciating. And so, it's very valuable, and therefore, why would you want to build something? It's going to take even more of your time. That's the whole point. We don't want to. We're building a property portfolio business so that you can get passive income coming in, and therefore it alleviates you as a busy professional, because I'm a busy professional as well, constantly 10 to 12 hours more working, and that's why I went into property, so that I didn't have to do that, and I had more financial freedom, etc. If you want financial freedom, then don't get too involved. Build a good foundation from the very beginning, so don't have the landlord mindset, have the investor mindset. And the fifth one, and possibly the biggest one in terms of the cost to you overall, is the fact that you're just not buying enough properties. Again, sometimes because you're over-involved in the first buy-to-let or the second buy-to-let, and you're thinking, how can I possibly scale this? It's just not possible. So again, buy more properties. Of course, the right properties, again, the market research, the right investments, because house prices are increasing, the value is increasing. And if you didn't buy a property where you could have 5 years ago, you look at what that value is now, you're losing out. So make sure you're not afraid to take that step to build your property portfolio, and of course make sure you're making the right investments. So that's what I had, really short video, but I really wanted to let you know some of these mistakes that I'm seeing from investors, so you don't go down the same route. If you're thinking about getting into the world of property, or you're thinking about scaling, you already have some buy-to-lets and you're feeling some of these pinch points already. Now, as I said, we support people that's going on this journey. If you're a busy professional, okay, a doctor, a dentist, your corporate business, whatever you may be, a consultant, you don't have time, but you want more time for your family, etc., then property is right for you, and you need to start having your money working hard for you. So we help busy professionals on that, and our investment area is Liverpool. We know a lot about the area. It's thriving, it's upcoming, and it's one of the best areas in the north to invest in today, and for the foreseeable future as well. So if you want to get in touch with us to talk about your property portfolio journey and your investment journey, and understand how can property work right for you and what's your strategy, then just type out in the comments LHG, or contact us directly via the email, which is in the captions below, and we'll have the discussions, and we can have that initial call, strategy call, to see how we can help you hands-free, because we know you're busy, and we can get you the right power team that's involved in building you the best investments. So again, it's hands-free. That's the whole point, right? Hands-free, so you don't have to worry about it. All you can see is cash flow coming in. Hope that video was really useful. So again, if you don't need help, hopefully it's valuable and it's something you can add to your knowledge bank. And please, if you find these useful, subscribe. We've got lots of videos always coming out. We want to help you as busy professionals to invest in property. So we will always give out information, all things on property. So check out some of the other videos we have, but until then, speak to you next time.